Hi, I'm David Schenk. I'm an attorney and enrolled agent, enrolled to practice before the IRS, and I talk about tax issues, estate planning, and asset protection. Today we're going to talk about how you can lose your passport over unpaid tax debt. At first glance, it might seem that having a passport and having a tax debt are unrelated, and maybe even at second glance. But that's not the way the US government sees it. The 2018 Fixing America's Surface Transportation, or FAST Act, requires the IRS to notify the State Department, they're the people who issue passports, of any taxpayers with seriously delinquent tax debt, which currently stands at about $59,000 or more, and it's indexed for inflation, so that number is going to change. And the law then requires the State Department to deny a passport application or renewal for people who have this seriously delinquent tax debt. The State Department may also choose to revoke an already issued passport, which obviously will limit your ability to travel outside the United States. Before contacting the State Department, the IRS is going to send you a letter and give you 30 days to attempt to resolve the outstanding tax debt. And there are some exceptions. The law makes exceptions for emergencies or humanitarian reasons, but not for financial hardships. So if you can convince the IRS or the State Department that you have some emergency need for your passport, or you have humanitarian need for your passport, maybe you work with Doctors Without Borders or something like that, you may be able to get an exception, but not if your job requires you to travel or other financial hardships. And the IRS generally makes exceptions for taxpayers who are considered to be in compliance. If they're paying through an installment agreement, or they're in currently not collectible status, or they're paying and offering compromise as agreed. I have individual videos on each of these topics if you need more information about them. Other exceptions include people who are challenging a tax debt. So if you're questioning that tax debt through the IRS appeals process, or people who have made a petition for innocent spouse relief. So keeping in tax compliance will keep you free to travel. If you're out of compliance, you can use the various IRS programs to try and maintain your passport. If the IRS is levying your assets or garnishing your wages, whether it's your bank accounts, retirement accounts, your house, your car, your Social Security check, your paycheck, or any other asset, there are steps that you can take. And note that I have individual videos on each of these programs. So one thing that you can do is you can simply pay off the debt. If you have the money or can get the money, paying the debt in full obviously will stop all levies and garnishments, and the IRS will also lift any liens that they have filed against your property. Another option is to file a collections due process appeal if you're within the appeals window. This is an IRS internal appeals process. It's only going to be available to you relatively early in the process. But they're going to pause any collections activities while your appeal works its way through the IRS process. You can also set up an installment agreement. Once you've established an installment agreement, all collections activities are going to cease. However, any liens that the IRS has filed are going to remain in place until the installment agreement is paid in full, or until you get the lien released some other way. You can ask for currently not collectible status. If you can demonstrate to the IRS that you can't pay your basic living expenses while at the same time making payments on your tax debt, you can be put into currently not collectible status. But be aware that the IRS's ideas of how much you need for your basic living expenses is quite low. For example, the IRS says that if you are a single taxpayer without dependents, you can live on about $1,200 a month. I don't know a lot of people who can live on $1,200 a month. You can also file an offer in compromise. An offer in compromise is a formal offer to the IRS to settle your tax debt for less than the full amount. And while they are considering your offer in compromise application, they're going to stop all collections activities, and the process can take from a few months up to as much as 2 years. Additionally, you can file for bankruptcy. When you file for bankruptcy, an automatic stay stops all creditors from any collections activities, and this includes the IRS. If you have a substantial amount of non-tax debt, this can be a really good option. But not all taxes are dischargeable, and it can be tricky to figure out which ones can be discharged. I have a video on this issue as well. If most or all of your debt is taxes, an offer in compromise is often a better choice. Or you can file for innocent spouse relief if your situation qualifies. If you are or might be an innocent spouse, the IRS is going to cease collections activities while they consider your application. And finally, check to see if you are approaching the 10-year statute of limitations, which is the limit on which a tax is collectible. You might just be able to wait them out. However, it can be a little tricky to determine exactly when the 10-year statute of limitations is up, because there are many situations that are going to toll or suspend the running of the 10-year limit. Disclaimer: this video and any accompanying text is for informational purposes only. The information provided does not and is not intended to constitute legal advice. No attorney-client or similar relationship is formed. If you require legal advice, please contact an attorney or other legal professional. This video covers a complex legal area in just a few minutes, and of necessity leaves out much of the detail. Don't make decisions based only on this video.